In this episode, we speak with Dan Williams, partner at Delta V Capital, an investment firm focused on growth stage software and technology services businesses. Founded in 2009, Delta V Capital has provided flexible growth capital solutions to innovative companies across infrastructure software, cloud services, CXO software, and vertical software sectors for more than a decade. The firm manages over $1.3 billion in assets and maintains offices in Denver, Colorado, and Dallas, Texas. Dan leads Delta V's infrastructure software practice, focusing on cybersecurity, AI, and DevOps. He has led investments in companies including Arctic Wolf, Claroty, Corelight, Teamworks, CloudBees, LogRocket, and U.com, with successful exits such as Socrata and Venafi. Before joining Delta V, Dan held product engineering and corporate development roles at Cisco and worked in the buyout group at American Capital. He holds a BS in computer science from MIT and an MBA with honors as a Palmer Scholar from the Wharton School. Dan was recently recognized as a top software investor of 2025 by GrowthCap. I am your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Dan, great to see you. Thanks for taking the time.
Yeah, likewise. I appreciate you having me, Energy.
Been a little bit since we last saw each other, and it's a pleasure to be now speaking with the silver medalist of the Jackson Hole Classic. Tell us, how did you get it done?
Just a beautiful setting in Jackson Hole. Great group of folks to get to hike with. There was nothing special, although half of our team is in Denver. So when we go up there, they put us to our paces in hiking quite often and force me to figure out the elevation. So I'll give the credit to them.
We're going to talk a little bit about your athletic background, but before we do that, let's talk about Delta V. And when it was founded, what kind of the premise was to the founding, and then when you got involved?
So Delta V was founded in 2009. We've been around a while now. And it was really founded, two founders came out of traditional venture firms and saw the trends towards secondary direct purchases that were occurring back in 2009. Things like Dropbox on a pre-IPO basis was allowing employees to sell shares and seek liquidity for their positions. And so Delta V was one of the early pioneers in secondary transactions, candidly, for growth stage technology companies. I joined the firm in early 2015. It was really just the two founders and myself at the start. And we've grown it now to $1.5 billion in AUM and 20 folks, 2 offices. So it's been a thrilling ride. I think the strategy has really evolved over time. As we started very secondary focused, but today we are a flexible capital provider. We lead primary rounds, we participate in primary rounds, we buy secondary shares to help provide minority recaps in growth stage technology companies, pretty much always on a minority basis. And that evolution has been fun to track and really helped to get involved with these companies in different ways than just buying a share off their cap table and really helping them to grow, roll up the sleeves, and getting involved with our operating experience. I'd say, maybe just a quick 2 things about our firm. One is that all of the partners here have operating experience of some sort, and that really frames how we think about the world. We focus in 4 particular sectors within B2B software and services where we have operating backgrounds. I lead our infrastructure software practice, which is kind of half cybersecurity, half developer tools, AI, some other components that sit behind the application. But as a firm, we're broad across these 4 sectors. And then the other thing that's unique, I think, is that flexible capital approach, being able to invest on both a primary and secondary basis. We also like to fund M&A activities for companies on a one-off basis, maybe even in between rounds. So very flexible in the way we deploy capital. And I think it's a little unique.
I'm curious, going back to those founding days, or even when you joined, you've a wonderful background, MIT, Wharton, great combination there. Presumably you could have gone to other firms or chose a different path. What drew you to kind of joining Delta V?
I think part of it was an entrepreneurial desire to, bet on yourself and do something small and new and have more responsibility and opportunity sets in front of you. You're right. So I came out of Cisco's corp dev team, went to business school and jumped to the private side. I was with a buyout firm for a couple of years, a group called American Capital. And coming out of American Capital, tried to decide where to go next. And a buyout firm was on the radar, but really wanted to get back to tech investing. And when I met the founders here, what struck me as unique here was that every deal that we do is proprietary. It's direct. We're not kind of working through banked processes. We spend a lot of time building relationships with management teams and entrepreneurs to be able to be helpful to them and support them. And for me, coming from an operating background, that was important and very differentiated from the buyout world where candidly most deals are banked and you're reading through SIMs and bidding on them against 20 or other peers. Here, it was a little more niche at the start and a unique and innovative strategy. The secondary market has grown tremendously since those early days and really proven out in a way that we've been able to be a pioneer in and evolve into.
And how do you spend most of your time? Given that you have the operating background, you could spend a lot of time helping these companies, but you're also an investor. So how do you divide up your day?
It varies every day. I think that's what is unique and exciting about the job that we do is that you get to do a bit of everything every day.
Mhm.
You can be out fundraising one day, in the morning and then be having conversations with some new AI company that's doing really innovative things, and then have a call with a portfolio CEO working through a difficult problem and trying to help them kind of find their way. So it's a good mix of sourcing new opportunities, fundraising, and then, helping the companies that we do get involved in. I think it's a nice mix.
And I'm curious because you were like the third person in, but now you're, as you mentioned, you're a lot more bigger than that today. How did you go about kind of developing a culture and what did you look for in people you were recruiting?
So we have a view here that every person we bring into the team needs to raise the bar and, stress me and challenge my partners to be better than they were the day before, to improve, to seek excellence, to continue to grow. And I think we've done that quite well. I think one of the things I love most about Delta V is the people, like first and foremost. It is a great group of folks that I look forward to getting up every morning and working with and working alongside. Honest, strong integrity, great humility, but driving, as hard as we can to go improve the firm and every aspect of what we do. And so those people permeated the culture, right? It is about who you hire and who you bring in. And, we do a number of offsites throughout the year. I mentioned half the teams in Denver. We often go on hikes and mountain bike, and we have a very active culture. And so doing things together outside of being the work environment and, in the same way that you all put on the event in Jackson Hole, like those types of things bring you together as people, even beyond just the day-to-day working, blocking and tackling of, executing a deal or digging through changes at a portfolio company. And the most rewarding part of this job, in my mind.
When you look at some of the successful outcomes you've had in your portfolio, what would you attribute the kind of return to, like the amount of maybe growth you were able to assist the company in operationally, or perhaps you were contrarian in building a certain relationship and then investing where others were maybe more fearful of going into the situation? Maybe that's the case, maybe not. But tell us a little bit about where you're getting the value.
Well, one, I'd say many investors take a little too much credit for the success of the company at times. And so it is the management team, the execs that we've had the pleasure to work with have really driven our returns. We learn from them every day. Hopefully we're able to be that thought partner and help and roll up the sleeves with them as well. But it is backing amazing teams, back to the people. If I think back to our best investments, and we did this at one point in time, one of the things we've done as a firm over time is narrowed our sector focus. I remember our founder, Rand, and I were at a golf tournament years ago. I'd probably been on the firm for 2 years or so. And we're sitting there watching the golfers play. And I had been working on this deal in the consumer space. And Rand looked at me and he's like, "Why are you spending time on this company? It's an interesting company, but you have no advantage as to why you're spending time here." And he was right. I'd spent 3 months working on this company. And if we passed, those learnings weren't really going to translate into the next deal that we did. It was going to be somewhat lost. And so we were a bit more generalist as a firm in those early days. And we'd find an opportunity here or there and, kind of be working around. These days, we've really narrowed our focus and said, where do the partners have operating experience and backgrounds that give us a leg up in investing in those sectors? And as I mentioned, I lead infrastructure software now. So I realized the deals I did in cyber and in AI and in DevOps outperform the others. And my partners have the same MO in the areas where they have backgrounds. So really that sector focus where it creates this flywheel effect around the work that you do in the sector, where when you do one deal, you're now that much more knowledgeable. You have a deeper network and set of relationships. And I don't think you can just be a tourist investor across every sector within tech today. I think you have to narrow your focus, and that's where our best returns have been.
In most of those situations, are you winning because you are first to the company? Are you winning because you're the one that appropriately sees the merits of the company? How are you winning?
I think part of it is the sector expertise in our backgrounds, frankly. Being able to talk to a CEO and them know that you sat on the other side of the table. Like I was with a startup security company straight out of undergrad, did my undergrad thesis in cryptography in the cybersecurity space, spent 7 years at Cisco in product and engineering roles, and was a part of their corp dev team. And that experience that you bring to the table is different than, let's say, someone who came up through a finance background. And I think many management teams value that within our sectors. It's less relevant to a consumer business, as I mentioned. So it's really in the areas we focus, our backgrounds are relevant. We'd like to think we're the first ones in front of them. Like we want to meet these companies well before they get to the stage that we would invest in. We invest at query stage, which for us is somewhere north of 10 million in ARR, no real upper bound. But we want to meet them when they're 2-3 million of ARR and really track them over time and build a relationship with those teams so that when they get to our stage, we're one of the first calls they make. So it is important to us to get in front of them early.
What would you say has been your best accomplishment with Delta V, maybe pointing to a portfolio company that you truly helped grow and scale?
Our best performing asset to date has been a business called Arctic that's in the cybersecurity space. They're a managed detection and response or MDR vendor, have grown meaningfully from, effectively a Series C stage company to a pre-IPO business during our hold period. Back to your question about contrarian views, I think it actually was our initial investment in the company back in 2020 was made at a time when it was unclear whether like NDR as a category, which had some services involved in it, was just a services company that should be trading on EBITDA or at a low single digit revenue multiple, or as a true SaaS company with recurring revenue, double digit revenue multiple. And today, if you look at CrowdStrike in the public markets, they have similar gross margins and have proven out that that whole category, which has some services in it, is truly valued in the double digit ARR range. So it was a bit of a contrarian view coming in. Companies proven it out and really expanded and grown. But an amazing team that took that. Brian Smith, who's the CEO or was the CEO at the time that we backed it, is now the chairman, and Nick Schneider, who's the CEO today, have taken that business to great heights and continue to outperform our plans and expectations all along the way. And I think one of the biggest areas that we like to get involved, and this goes back to my Cisco days, is around M&A. I think M&A can be a very valuable value driver in helping a business to grow, usually not in a financial engineering sense, in that you acquire a company and it just adds ARR and you're able to get some multiple arbitrage out of that purchase, but more from a product sense. How do you add products alongside maybe a core offering that are strategic and valuable, and maybe those products are really strong, but you don't have the same go-to-market strength behind a small company that you do, at Arctic Wolf today, or we did at Cisco years ago. And so Arctic Wolf has been quite acquisitive in adding products alongside that core offering. And that's been one of the drivers. It's helped them grow. We've done this across other companies in the portfolio as well. Teamworks, which is a great vertical software business focused on pro and Division I sports teams, started as a single product, and we backed them in the Series C. During our whole period there, they acquired over 15 companies. Again, many of them small from an ARR perspective, but amazing products that didn't have the breadth to be able to go sell into the Boston Red Sox and the New York Yankees. And Teamworks added them to the portfolio from a product perspective. That horizontal, what they now call the operating system for sports, really set them up to grow the company and to be more meaningful and relevant to their end customers.
Yeah, with M&A, the common question and challenge is often integration. How have you been able to maybe streamline the way you go about integration?
Yeah, so at Cisco, we had a whole integration team, the corp dev department, tens of people out as an army to help integrate these companies. It's one of the jobs in M&A. I think one important factor is thinking through the alignment with the team that comes in. So if the acquisition is viewed as an end-all be-all exit event that is the end where they've made their money, and they're off to do the next thing, well, then they're going to stay there until the non-compete wears out or however long their shares vest, and then they're off to the next thing. If you can co-opt that team instead into believing that they are now a part of a bigger platform and align them with, enough equity in the transaction or on a go-forward basis from an options perspective, that they're aligned and excited to stay there and continue to run it, then you've not only up-leveled the product set that the company has, but you've up-leveled the team because you brought in this great entrepreneurial mind that was able to build a great product and you're able to retain them. And if you ask Zach Maritas, who's the CEO of Teamworks, that's been exactly his view. And the founders of many of the companies that he's acquired are still there, or either running the same product or taking on larger roles. And so team building through M&A, I think, is an important aspect of that integration piece.
Mm-hmm. Tell us a little bit more about yourself. Where are you from? Where'd you grow up?
Yeah, so I moved around a bit as a kid. My dad was in the semiconductor industry, but I'd say Connecticut was kind of home early on when I was a little kid. Grew up playing hockey. My dad had me on skates at 2 years old and played hockey all the way through undergrad. We moved to Texas in 95 when I was 10 and to a high school here. Luckily, the Dallas Stars moved here in 95 and were able to build out rinks. So I was able to play hockey here all the way through high school and college. But I'm a Texan at heart. My kids are Texans. I'm based in Dallas.
Excellent. All right, we're entering the tail end here. Last two questions. One is, can you tell us about a person who has had a profound influence on you?
Yeah, I mentioned my dad. My dad and parents, mom too, were super instrumental in my upbringing. My parents grew up in a small town, Potsdam, New York, that's up on the Canadian border, almost more Canadian than they are Americans, Amish country. And, my dad left and went to RIT, studied photographic science, and then took on sales roles in the semiconductor industry. And he was just an amazing role model for me as a kid, helped to incubate my curiosity around science and math. Said, hey, your first degree should be in engineering. If you love math and science, you should get MIT. So that was always my goal. And then you don't want to miss the business side of it. So make sure you get an MBA at some point as well. But he coached my hockey teams growing up, taught me calculus in the inside of a windshield, driving between hockey games, had a strong work ethic and humility. And, maybe just thinking back, I remember as a kid, I really wanted to buy a bike, like one of those little BMX bikes, you do tricks on. And came my dad and said, hey, I want to buy this bike. And he said, well, how do you know that's the bike you want? There must be like other bikes out there. Have you really compared them all and figured out what prices for each of them and feature sets? So I went off, brought back some research. It's like, that's not good enough. We need some more. So by the end of it, I had this binder and full presentation on why this bike was better than the whole competitive set behind it, and gave him the whole pitch, and he funded the purchase of the bike. And that learning for me is, how we today, as a product manager at Cisco, it's how I thought about doing diligence on the products we had and how that compared to a competitive set. Today, it's how we think about diligence of the companies that we involved in. What is the competitive set? How do they all stack up against each other? And all goes back to buying that bike.
Awesome. Love that story. Last question. Tell us what you like to do outside of work.
Well, family is important to me. I've got 3 boys, 12, 8, and 4. And my wife, we really enjoy spending time with them, traveling and whatnot. But hockey is my passion. As I mentioned, played hockey all the way through MIT. My 8-year-old plays on a team. I help coach the 8U team here in Dallas and play men's league on Monday nights. And having that athletic outlet in the midst of all that goes on and the stresses that some of this industry, kind of puts on you has been great. We're big Dallas Stars fans. And so yeah, hockey's first and foremost for us.
Dan, want to thank you again for taking the time. It's been a great conversation.
Awesome. Thank you, Arjun. Appreciate you having me.